There's not a lot of pressure going on there, and you've got to remember that if farmers aren't looking to spend much, and that's coming through from the drought, then there's not going to be a lot of money flowing through to some of those rural communities. So it's going to have an impact, yeah.
Don, what would be some of the maybe hidden financial issues that need to be taken into account with the onset of yet another natural disaster like this drought?
Well, it is a natural disaster. I was on a farm yesterday afternoon, and they are just against the wall. They've got no feed. They can't buy feed. I think farmers have got to talk to their bankers. I would call a meeting with my banker, get some support around it. Don't spend any money anywhere. A lot of farmers are saying, well, we're going to have to cut back capital stock, we're going to drop our car numbers a bit, lower the cost of bought-in feed, and try and get back to basics, back to sort of a more grass farming system. Banks will tell you that's the most profitable.
Right. And James, what about the flow-on effects for next season? Won't this have a sort of continued repercussions, domino effect?
Yeah, it will, and we've got to think about some of the positives that come out of drought. In 2008, then we saw production across the meat sector as well as the dairy sector come down, and that actually had quite a positive impact on international prices. And we have seen that a little bit recently with global dairy trade auction spiking up, and that's come about because of some of the global production coming down through Europe, but here in New Zealand too because of drought. So prices do tend to increase when production is down, and land prices did spike up 2 years ago when the drought came through too.
Right. Now, Chinese expansion into our country. Don, you're hot on this topic. Isn't there a heightened risk to our dairy industry when the Chinese are looking at buying up large tracts of land for their own dairy operations, and a vertically integrated one, farm to factory? Are people concerned out in the sector?
Yes, certainly, John.
What are they saying?
Well, they're very concerned that the Chinese would come in and buy up tracts of land. Very, very concerned because they'll just come and run the dairy farms. The product will leave New Zealand, they'll have their own factory, and we'll get no benefit whatever. More than that, they'll take a lot of our technology and expertise and develop it in their own way. I think it's a very sad thing. I mean, you could like it to the kiwi fruit industry. When they were trying to develop the kiwi fruit industry, people were selling the canes out the back door so other countries could grow the stuff. Yeah. So I think, New Zealand needs to think about it. And do we need a national policy in agriculture so these things are looked at?
Now, James, what kind of pressure will large-scale overseas investors place on the dairy industry?
Well, when you look at what is happening overseas in China, it's going to be probably
because we're doing it to them, I guess.
Yeah, in some ways we are, and the Chinese are doing it to other countries. They hold the most US Treasury debt, so up to sort of $900 billion. Right. Some of the other emerging economies, they're coming through this recession quite strongly, and some of the power is moving to those areas of the world sort of over the next 20 years, and that some estimates suggest that up to 40% of economic growth is going to come from emerging economies. So Brazilian meat companies are going into different markets, Chinese companies coming down to New Zealand. That's probably something that we're going to see more of, and the Chinese are taking a long-term view at things, and they're going to continue to do that. They're looking at agriculture to secure food down the track.
So we're going to have a pretty alert sort of early warning system, if you like, looking over the horizon just to see where all these trends are going, what countries are selling and what other countries, and setting up industries in these countries, aren't we?
Yeah.
Now, a new report, Don, from KPMG says New Zealand's agricultural sector has 5 years before low-cost third-world producers start to undercut our commodity prices. Do we need to be going more high-end in the global marketplace, do you think?
Well, I mean, that's an issue for Fonterra.
To fight that.
I think it's an issue for Fonterra, and I think they're pretty focused on going more high-end. I think the other thing is that in New Zealand, back on the farm, that they need to think more about the cost of production. And, a lot of farmers have gone to high-input farming. They're buying a lot of feed, not getting much increase in production. So their cost of production is rising. And I think this drought will take a lot of farmers to look at their business and go, oh, ouch, this is not working. Maybe we need to go back to growing more grass, reasonable amount of supplement, and running a more efficient business.
Now, James, Fonterra, of course, has the global presence to withstand that sort of pressure from emerging markets, but sectors like meat and wool, our very traditional ones, are they able to withstand that competition?
Well, when you look at Fonterra, then yes, we have a big global presence in terms of trade, but we do only produce 2% of the world's milk. So a lot of that milk stays within borders, and that does have an impact when you look at some of these emerging markets really start to crank up production, and that could have an impact on our dairy industry. In terms of the other industries, then yeah, of course Brazil, they've got a massive tract of land. They are exporting a lot of meat, and it would be difficult to see us really competing with some of those countries if they really got wound up. So it would have an impact down the track.
Now, Don, Craig Norgoat and his Rural Portfolio Capital has told the market he is going to have trouble meeting its next dividend payment to shareholders, and our Rural Portfolio Investments owns a 12.5% stake in PGG Wrightson, and it's looking like he may be forced to sell down that slice. What would the implications of this be, do you think?
Well, you've got to ask yourself the question, who's going to be the purchaser of that? And the Chinese already own a large portion of PGG, so I presume they'd be the purchaser. I don't think there's anyone else in New Zealand that could underwrite it or write out that sort of check. So.
Would that give, if that did happen, that would mean a Chinese majority holding?
I'm not sure. James, would they have majority there?
It might come close, so they Agria hold up to sort of 20%.
Oh, yes,
so
Agria.
it would be getting up close to that majority. I'm not sure of the particulars.
Yeah. Now, South Canterbury Finance has been in the news for a couple of weeks now. The company owes 30,000 investors $1.9 billion, and it's now planning a capital raising of $1.25 billion. How realistic is this proposition, Don?
You'd have to be concerned. My understanding is that a third of their book is principal interest, a third's interest only, and a third of it is actually interest accrual, and people can't pay. So where's the $1.25 billion going to go? Is it the right thing to do? Is it going to create more lending or just prop up what they've got? So it's a real concern, I think.
And James, are there any traps that would-be investors should take into account with this type of capital raising? And don't let's forget that they've got a government guarantee. Yeah,
that's right, and we've got to remember that people have got to look at this and weigh up the risks, take into account all those things, make sure that they're going to get the right return for all those risks. But they've also got to be aware of the government guarantee scheme, and that is changing in October from covering people up to $1 million down to $250,000. So they've got to look at those and consider all those different intricacies.
There are a lot of intricacies, but it certainly looks like they're going through a very rough time, doesn't it? At the moment, with particularly with a loan book, a third of which, by the sound of it, roughly, is very bad loans to the property sector. Well, thanks for those insights today, Don and James. We'll be back in a moment with a wrap-up of today's discussion and the final word from our panellists about what they think is in store for the primary sector over the next week. Welcome back. Well, it's been a lively discussion today. A couple of points of interest to me were South Canterbury Finance and its loan book. Now, their CEO, Sandy Meyer, has divided it into three, with one of those thirds characterised as a bad bank, with loans of $500 million into the property sector. Don, how on earth could they find themselves in that situation when they knew that the property sector was looking pretty shaky?
Well, a lot of those loans were made before the property sector went shaky.
Right.
There was so much money around, and they were making risky loans using subsequent securities, maybe second mortgage, stock securities. But developments, they're just worth nothing now, and that's what's probably really made it difficult. Those people can't pay the interest. Obviously, South Canterbury Finance are holding the property as an asset, no money coming in, and it's just all bad.
And second and third mortgages?
Yes, they didn't do a lot of third mortgages, but they did a bit of second mortgage stuff, and they always were second-tier lenders, whereas the banks were on first, so they took more risk on than the banks.
And what about converting interest into capital too for the repayments? Is
well,
that
John,
a factor?
If the equity's gone out of the development, where's the return? You've got no equity, so you can't really convert interest to capital. And I'm sure James would be aware of all that stuff too. The other thing is that, developers became a really dirty word as soon as the economy bit hard.
Yeah, indeed. Now, I've pricked up my ears as soon as whenever China comes up these days, James, and I'm sure you do. It's going to be interesting to follow the fate of the Chinese application to buy up large tracts of our dairy farms. What do you think their chances are, actually, of getting permission from the Overseas Investment Office?
I think it's going to be interesting to see what comes out of this, but the government's going to be very, very hot on this issue, and they've had to deal with a lot over the past few months with barn feeding in the Mackenzie country, all those sorts of things, and the OIO will take this seriously. They'll look into all these things in great detail, and we've got to remember that a couple of years ago they did block an investment from the Canadians into our strategic airport. So considering that dairy farming is pretty important to our export industry and to our overall economy, I think they're going to take this very, very seriously.
I mean, just look